What's up, guys? Welcome back to the channel, or welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. I do not offer an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open up a new Webull brokerage account, put at least 1 penny in that account. They're going to give you up to 12 free stocks. If you're interested in that offer, there's a link down in the description box of the video. Go click on that Webull link, open up that new Webull account today, go get that free stock, go get that free money. The Federal Reserve today, guys, increased short-term interest rates by another 75 basis points. That's the fourth time this year the Fed has done a 75 basis point rate hike and the sixth rate hike for the year. Now, they will be meeting again in December. And it's widely expected that they will increase short-term interest rates again in their December Fed meeting. Now, how much they're going to increase it, we still don't know that yet. That will depend on inflation, right? We should be getting the October inflation numbers here shortly. And when we get those October inflation numbers, we'll be able to see if month-to-month inflation is coming down or going up. We are going to be able to tell a lot from those inflation numbers that we get a little bit later in November. Now, what we do know, though, is the labor market is still pretty daggone strong. And that's not a good thing for inflation, guys, because the more people have buying power, they're going to keep buying, right? And the labor market right now is so hot that there are more job openings than there are people to fill those jobs. When you're in a scenario like that, when you have too much demand from a job opening standpoint and not enough supply from people to fill those jobs, it tends to do what? Increase wages. And that's what's happening. Last month, we saw a 7.7% increase in wages month over month. So when people have more money, guys, we just tend to spend more money. Our country, our economy is based on us spending money on things. 70% of our economy is based on consumer spending. So the Fed knows that. And until they can cool down the labor market and really have us as Americans start feeling some real pain, then inflation is not going to come down as fast as we want it to come down. And that's the reason why we keep getting these 75 basis point rate hikes, is because of people continuing to spend and they're not feeling the pain yet. But I tell you what, the real estate market, specifically the housing market, is feeling the pain because home prices have started coming down. And one of the main reasons home prices are coming down is because of 30-year fixed rate mortgage rates. See, 30-year fixed rate mortgage rates are around 7%, and they went from 3% a year ago to 7%. So the housing market is feeling the effects of the Fed tightening and increasing short-term interest rates. But the rest of our economy, as it relates to people going out and buying things, clearly they're not feeling it, because if they were, inflation would have already been coming down, which it's not. And again, like I said, with a strong labor market and people having jobs and people getting increases in wages, that is going to continue to be a problem for inflation, right? Inflation will only come down when people stop spending money. And I'm not talking about spending money on basic necessities. I'm talking about spending money on things that are not basic necessities. A lot of people are still traveling. They're still traveling, man. Like inflation is 2%. right? When it's 8.2%. So people are still buying new cars. People are still coming out paying cash and buying new homes. There are a segment of the population that don't finance their homes. They just got the cash to be able to go buy it. And that's what's happening. But when you go to the grocery store, everything in the grocery store is 20 to 25% higher in price because of inflation, right? You go to the gas pump, gas is more expensive than it was a year ago. Now, that doesn't have everything to do with inflation. There is some other things at play dealing with the gas, but inflation is still impacted by higher gas prices, right? Because what is inflation? It's just, the measurement of price increases in the goods and services that we use every year. That's all inflation is, right? So when we get the CPI numbers for the month of October, we'll have a good indication, or at least the Fed will have a good indication if the rate hikes are helping, or do they need to continue doing more rate hikes? And that's the question. So the CPI numbers later this month are going to be really, really important to tell us if the month-to-month inflation numbers are going down or the year-over-year inflation numbers are going down. That's going to be pretty important information. Yeah, the Fed is stuck between a rock and a hard place because on one end, you got people saying, hey, you're too hawkish. We're going to destroy the stock market if this keeps up, right? Then on the other end, people are saying, okay, we've done enough. Let's soften up a little bit and be dovish and put a pause on increasing the rates and let's let the stock market rally and finish the year strong. So you got people on both sides of the Fed chair's ear, right? The Federal Reserve's ear. And who they listen to, who knows? But we'll know at some point in December when they meet again, which way they're going to go. Because if they decide in December, we've already had 4 consecutive 75 basis point rate hikes. We're not going to do 75. We'll do a quarter. Then that's good news. But if they do another 75 and then they indicate in 2023 they're going to continue rate hikes, then I think the stock market is going to be in for some trouble, at least through 2023, because if they continue these rate hikes, there's no way investors are going to feel confident enough to be in the stock market and buy shares of companies. They're just going to keep their money over in safety, right? But as investors, like you and I, individual investors, retail investors, it's still a great opportunity for us to be able to buy these companies, buy these ETFs, buy these cryptos, and all these other paper assets while they're on sale. Just continue buying them, man, and being prepared to hold them for 3, 5, 7, 10 years. So it's not a bad thing for us as investors trying to build wealth. It's a great opportunity for us to continue dollar cost averaging in to our favorite companies, our favorite ETFs, our favorite cryptos, right? We got to keep doing that. And then with that long-term outlook, though, knowing that this bear market is going to last, good through 2023, probably a little bit into 2024, and then around 2025 is where we should start seeing the beginning stages of that bull market. That's my opinion, guys. Not your financial advisor, just letting you know what I believe and what my opinion is. My recommendation always is you go out and do your own research, right? Don't just listen to me or any other guy on YouTube or any other person on network TV. Don't just listen to these people. That includes me. What you need to do is go out and do some of your own homework. But history tells me if I buy assets, paper assets, and they're blue chip assets, blue chip companies, blue chip ETFs, and I hold them long term, history is on my side. History tells me I win because that's what I've done over the last 20 years, guys. I just buy and I hold, but I buy good blue chip companies. I don't buy these companies that I don't believe will be here tomorrow. I just buy things that I know have a great opportunity to be here tomorrow. And if you do that and you hold it long term, you'll build some wealth. So drop me some comments and let me know what you guys think about the Fed increasing short-term interest rates by 75 basis points. And do you think they're going to increase them again by 75 basis points in December, which will be 5 consecutive 75 basis point rate hikes, which is unprecedented, guys. And that means the Fed is serious about getting inflation down to 2%. Well, if you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.